Ken's calling, hey? Okay, all right. No, I guess you guys are right. Maybe he is calling. Hello.
And yes, Jackie, it's Ken. Can you hear me? I wanted to call you. I needed to speak with you. We had something to talk about. I noticed that the price of GME shares is up today. But what has me tremendously concerned, Jackie, is that, I saw that the cat tweeted today, and that makes me a very upset man. Jackie, a very upset man. Now, some people will think that I have a problem shorting GME, but even if I did have a problem shorting GME, I definitely would not be in trouble if this thing broke 25. Maybe you guys could stop making the share price go up? Is that like a thing? You guys think that you can do that?
Chat, what do we think? Should we stop making the price go up? What do you think, chat? Should we stop or just let it keep going? What do you guys think? Let it keep going? Let it keep going? Let it keep going? All right, click. Sorry, Ken. I had to hang up on you, buddy. That's just the way that she goes sometimes. Sometimes she goes, sometimes she doesn't. It's just the way of the road and the way that she goes. Gee!
Kenny's calling, you hear that ringtone? Kenny's calling, your Jackie picked up the phone. GME is falling, and Jackie's spitting gold. Citadel is falling, Kenny better buy what he sold. Kenny's calling, you hear that ringtone? Kenny's calling, your Jackie picked up the phone. GME is falling, and Jackie's spinning gold. Citadel is falling, Kenny better buy what he sold.
Yes, hello, Jackie Latit speaking. Jackie Latit speaking.
Yes, hello? I'm looking for Jackie Litzler. Just kidding, Jackie. I know it's you. Just can't hear. Listen, I'm just gonna cut right to the chase. Listen, I called you because I'm in a bit of trouble. I'm in a little bit of a pickle. These stupid people, they call themselves kids. They saw GME at that stupid-ass fucking idiot $19 level that you said was a really good spot. And then all these motherfuckers, they bought it. They bought it. Then earlier this week, I tried to slam the price down and really spook people, but that didn't work either, Jackie, and now...
Yo, Ken, don't cry, my man. These were poor decisions that you made. But you're a market maker. You can just whip up a couple of fucking naked shorts, and...
Yeah, I guess
you probably could slam the price down if you wanted to. Maybe like not at this exact moment, but you could slam the price down.
Yeah, I guess you're right, Jackie. I guess you're right.
Listen, so don't take it personal, right? The apes got to win sometimes. I mean, conveniently, they've been winning pretty much since I've taken the helm of making sure the GameStop investors quit getting fucked over. But it's you'll have your time, right? You'll have your moment at the sun.
But Jackie, they're so mean. They call me the mailman.
Hey, listen, you called us dumb retail and dumb money, and you called us a bunch of names. Wait, you thought they were all just gonna sit there and be nice to you after?
Yeah, I guess you're right.
I mean, you literally had the SEC make a video about us trading meme stocks. And now you're crying because they're being mean to you, talking about mayonnaise and bedposts and all this shit. That's what makes you upset, bro. You gotta toughen up. You're a market maker in the stock market.
Yeah, you're probably right. I'm tough. I can be tough.
I know you can, Ken. I know you can be tough, little guy. Right? So why don't you show your toughness by going out there and buying another Declaration of Independence? Maybe you could donate a second one to the Historical Society.
Yeah, that's actually kind of cool. I could probably do that. Okay, Jackie. Yeah, all right. Yeah, you made me feel better, Jackie. You made me feel so much better. Oh, I'm gonna get these pesky little retail traders. I can't wait for Monday.
You know the market's closed on Monday, right? Ken?
Fuck you, Jackie.
Make information.
Yeah! What? Okay, go. Tits gang in this bitch. Sky Daddy on the charts. Let's go. What? Okay. Let's go. From the Discord trenches, deep in the South. Sky Daddy dropping charts. Ho, shut your mouth. Technical analysis, straight heat for real. Candles line up. Watch the green get beauty in the chat every day. No days off. Trades get shared, then the money get tossed. Jackie let it stream. He locked in tight. Southern boy grinding from morning to night. Who that is? Sky Daddy. Who that is? Sky Daddy. Dropping them levels, making them scatter. Who that is? Sky Daddy. Who that is? Sky Daddy. TG Discord God, ain't nobody better. Sky Daddy, yeah. Sky Daddy. What? Tits Game King. He running this map. Charts in the chat. TVA so fat. Jack on the stream. He never missed that. Sky Daddy. Okay. Sky Daddy. Yeah. Trading guy status. Stacking that cash. From the Discord to the profit. Watch it go fast. Sky Daddy. Dropping cash on your mama's fatty. Waking up early, pre-market heat. Most of them setups that can't be beat. Supporting resistance, Fibonacci clean. He see the move before it even lean. Jackie Lakes is live, he right there tuned in. Calling the place while the volume spin. Community wild when he drop the alert. Ride with Sky Daddy, that's the word. From the group chat glow to the YouTube light. Sky Daddy, keep the energy right. No fluff, just facts, pure signal and might. His gang forever, we trade through the night. Yeah. Okay. Sky Daddy, on the way. Sky Daddy, yeah. Sky Daddy. What? Tits Gang King, he running this map. Charts in the chat, TVA so fat. Jackie eat on the stream, he never missed that. Sky Daddy, okay. Sky Daddy, yeah. Trading God status, stacking that cash. From the Discord to the profit, watch it go fast. Sky Daddy, dropping cash on your mama's fatty. Sky Daddy, Tits Gang, charts of okay. We are Sky Daddy, TG forever. Body better watch Sky Daddy when he on the scene. He may show up with his trusted trader tag and steal Darlene. Sky Daddy, the real baddie. If you didn't know, now you do. Sky Daddy, it's TG through and through. What do we hate? Negative premium!
What do we want?
Positive premium! Positive premium, positive premium, positive premium, positive premium.
Positive premium, 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 higher, higher, higher.
Hands in the air, we're almost there. What do we want? What do we want?
Say it louder.
When do we want it? break out to the moon. What do we want? What do we want?
Ain't can't wait to quit my 9 to 5.
Dogs, audios.
Wake from your sleep and dry off your tears. Today we escape.
We escape! We escape! We escape! We escape!
For shorts to close and cry their salty tears. Today
We escape! Game stop!
soon, when the trade is done and we take our gains. Today we escape.
We escape! Game stop!
From your sleep and dry off your tears. Today we escape.
We escape!
We escape.
Yo, screen's green, let's get it lit. It's your boy Jackie lay tips. Swipe up with G and me, moon in quick. Always jack ticket tits, never grip. Drugs on fire, levels getting hit. Rules run by, there's big splint. Pull up, lock in, box will miss. Jackie live, we Britain this.
Always jet to the tits.
Yeah, let's trade, baby, go! Woo! Always jack ticket tits, never grip. Drugs on fire, levels getting hit. Rules run by, there's big splint. Pull up, lock in, box will miss. Jackie live, we Britain this.
Always jet to the tits.
Yeah.
That whole song is just a vibe. I don't know if the rest of you feel that way, but that song, first thing in the morning, it's just a vibe. You know, it's just a vibe. It's great to see all of the names and all of the faces here within the chat box this morning. We actually started early. I don't know how we've managed to do this, where on the big important days, Jackie's like 45 to 60 minutes late. And then on the days where literally nothing is happening, Jackie shows up 22 minutes early. So listen, I don't know how we got here. I don't know why we got here. But we got here regardless, okay? And that's what happened. So it's great to see everybody here this morning. So this morning, I wanted to just quickly talk about just two things right away that caught my attention that I want you guys to pay attention to here today. First, BBWI, Bath and Body Works. We wrote this harmonic. I don't remember who brought this to us. I don't remember how long ago we drew this. But my alert went off this morning. So now is a good time to pay attention to this with this harmonic completion. I'm not telling you to enter it right away. Okay, my suggestion is to be patient with this because as you can see, there's a big indicator signal that's building. My hesitation about wanting to long this comes from this indicator building because what were to happen if this were to create a death cross and then this thing, even with the harmonic completion, gaps down? What if this then turns into a crab? Right? And then we have a poor entry up here. So this is going to be one of those unique scenarios where, trading the initial reaction may not necessarily be, I'll say, the best play. It's a play, okay? And I don't think it's stupid because you are at a macro golden pocket. You are just above a mega macro 236. You are at macro support, and the company did just report in earnings, right? Now, dumb fucking retards will listen to me talk about this, and then they'll say, oh, there's Jackie being wishy-washy saying this, and then, okay, you want me to make this very, very clear? I'm not interested in trading this on a reaction, so I'm not gonna. Okay, cool. The harmonic completed. Sweet. Right on. That's great. I'm very happy, I think, about that. But now the stock's got to prove it to me. Now, it doesn't have any bullish divergence that has confirmed yet. It doesn't have any clear signs or signals that jump out at me that say, here we go, Jackie. This is the one. This is where it's going to... I don't have that. So rather than get overzealous and try to perfectly time the low, you know what I'm going to do? I'm going to let it set up. Prove to me. Prove to me first that you can hold this low and build divergence along the way. And then I have a clear risk reward. Right? So the reaction may not necessarily be the trade. This is going to be one where you want to pay attention to it, mark it on your charts, watch for divergences, look for this, that, and the other. But as it stands right now, there was a golden cross that immediately failed. And now it's creeping towards creating a death cross. Right? That's not bullish. Yeah, harmonic and support, and yeah, okay, yeah, but okay. Me, I like to be cautious in these scenarios. The support is great, so I already know from a trade perspective that there is some pretty nicely defined risk and reward. My concern is that this could fail this support and ultimately push down to the more macro 236. Giving us this way, way, way better opportunity from a risk-reward perspective. Okay, so that is BBWI. Okay, BBWI. Putting it on the watch. All right. Everybody with me so far? All right, everybody with me so far? Good morning to all of you here in the chat box. What do you guys think about the early start? What do you guys think? We did it. We made it early. I can't believe it. I know. Neither can I. But we did it, folks. We did it. We made it. Okay. So this morning, I'm sure some of you guys saw on the thing, I was writing here, Chewy got a price target cut from 42 to 37 by Morgan Stanley. Can you all join me in giving Morgan Stanley the finger? Yeah. Suck it, turd. Suck it. Eat shit, bum. And then I was thinking about it and I was like, wait, they cut the price target to 37, but the stock's trading at 24. Don't you know bump it up? You got to bump it up. Don't you know bump it up? You got to bump it up. Don't you know bump it up? You've got to bump it up, don't you know? Bump it up. You've got to bump it up, don't you know? Bump it up. You've got to bump it up, don't you know? So that seems like it's a lot. Let's see, 37. Okay, and then we'll go from here to 37. Okay, everybody do it collectively. Everybody do it collectively with me. Ooh. Ah. So that's what we got going on with Chewy. We still didn't hit my profit target yet. We still didn't hit 24.90. So I will wait for you. Do. Will you please go the fuck up? Boom, boom, boom. Don't let my options expire to 0. You only need 40 cents. So that would be nice if Chewy would stop fucking around and if people would stop downgrading it like seconds before my profit target. That would be very nice. I would appreciate that. Next one on the docket to talk about. I hate you. I hate you. Okay, well, I was about to get excited that Unity was down 2.5% and the puts be a putting. However, in a interesting turn of events, Unity finds itself back green on the day. So we're all just going to pretend like we don't care. Stupid stock and idiot. And we're just going to go over to AMC. Folks, AMC this morning in a beautiful 15-minute RSI wedge. I'll just ask a very simple question to the chat box. Everyone watching and listening to this, which I think currently is about 6.5 people. We could actually start our own TV show. They had 2.5 men. We now have 6.5 chatters. Sponsored by DraftKings. Don't forget to get your parlay with your parlay to parlay that parlay into. What is going to be the confirmation of this breakout, folks? What's going to be the confirmation of this breakout? Oh, yeah, Jackie's already asking you questions fucking 5 minutes into the trading day. 5 minutes in. Oh, yeah. Screenplay. Well done, sir. Barstool Chess, you getting there. Ice Fan, good job. Poop. Jackie Latin. Okay, good. So what we're looking for, guys, is on the 15-minute RSI on the wedge. We're looking for the center line break. And then with the center line break, the second part of the equation is going to be the MACD crossing below center. And if we can get this, we have multiple touches of MACD divergence, suggesting that this could turn and burn and give us a breakout back up to the prior highs of $3. It's very, very, very close. Very, 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 very close. It now just needs that last little oomph. That oomph. You know, the oomph. Now, what we can also do is if the 15-minute fails to make that breakout, we can then go up a time frame to the 30-minute because the 30-minute is also in an RSI wedge. And then we could say, well, listen here, bucko, if the 30-minute fails at the top of this, then wouldn't that suggest that we failed to break out of the structure and the 15-minute failed to center line and the MACD failed on the 15-minute and that this would go like this? So this is why on the 15-minute, you want to use that and watch the center line as your confirmation for a possible breakout here. Because right now, it looks amazing. But in 45 minutes, it could reject that line, and then we could push down, and then no. So does everybody follow along so far on AMC? Barstool, Poopacabra, Jackie Tin, Moneypenny, Mike Z, Birder, Black Jesus, Omar's, Ben, John, Ice Fan, what's up, everybody? Just Tans, The Dogma, Chris Rauk, can't wait to quit my 905, Andreas, Broken Windows, Rabbit PR, Zoe Dave Chappelle, what's up, everybody? Mac B, Boom Shakalaka. It's actually Boomstick, but Tommy Gun, Elite, Bacon, Screenplay, Sog Dog, Sage Up, Northwest, Bill Foster, Jordino, GME Cat, Random Ape, There's No Limit, Steven. What's up? What's up, everybody? Cementia, Colors and Shapes, Crazy Tail. What's up, guys? What's up? What's up? All right, so continuing on with the theme of just going through our list of stocks, the next one is eBay. So eBay so far has hit resistance at profit target number 1. It's pushed back. It's still managing to hold macro support. It's still managing to hold macro support at 104.67. All right. So nothing too dangerous here. I think it's just sort of everything is just kind of chilling on this thing as we head towards the dividend distribution date. All right. We're right here at the dividend distribution date, which is on Friday. And then once we kind of get through that, I think that's where the stock could pick back up again. So just got to be patient if we drop to the 4-hour. RSI so far below center. Not really too much to say here. Go to the hourly. Hourly right at center. So not too much to say here either. 30-minute. So 30-minute, we could draw a quick little micro fib. Here to here. You can see still above the 382 as well as the macro 236. So all good there still as well. Okay. Open up the RSI. Yeah, not much to say here, guys. So eBay just chilling. Wendy's. Why won't you just break? Why can't you just break out? I'm gonna get angry. And you won't like it. When I'm angry. Why the fuck is the AC on? 1 second. Fucking freezing my tits off in here. And then the fucking AC has the nerve to turn on. That's crazy. So, Wendy's, guys, why can't it just break this box? I don't know. And it's making me angry. But we are still holding above the macro 236. We still have the golden cross. Price is still in the upper half of the daily Bollinger Bands. And there is some positive momentum. We just have to continue to be patient with Wendy's and wait for this breakout. But in my opinion, one of the most important things that we want to continue to see happen is price staying above that 236. All right, at 880. Okay, so that's what we're looking there on Wendy's. YSS. We're just waiting. You got the RSI wedge, you got price back at the little support. Like, it's either going to do it or it's going to stop us out for 10 or 15%. You know, so let's see what happens. But it's still in the wedge and it's still divergent and it still looks kind of cool. So I'm just really hoping that this is going to do something. So please do something. All right, so that's where I'm at with YSS. Not really too much else to say there. Nokia. So Nokia also continues to hold above its macro 236. I don't know why I've drawn it so far over there. Was it 987 or 997? What was that number at? 997. Okay. 997. I get enough. So continues to hold above the macro 236. Every day that it does that is very positive. The number one thing that we're probably going to be focusing on with Nokia going forward, it's probably going to be less about these Fibonacci's now and more about the pinch between, wow, that was a great drawing. The pinch between the 200 and the 50. So this are 50. This are 200. And you can see one of the strategies that we've kind of, I'll say, unlocked over the summertime is we realized that stocks love to get pinched between these moving averages before making huge moves. And we kind of have that setup taking place on Nokia. So over the next coming, let's say 4 to 6 weeks, this is likely to get pinched between these two moving averages. And then at that stage, we're going to look for the really big breakout move. Now, obviously, we all hope that it's bullish and that it's holding this 236 and looking for a bounce off of the daily 200 and making a significant bounce. We check in on some of the technicals. We're a little bit below the center, but nothing too overly aggressive. We just have to be patient. We just have to be patient and let this develop into a move. So we're going to watch Nokia over the next coming days and weeks, right? We're going to obviously look for it to hold the 236 and hold the daily 200. But more importantly, I want to see it get pinched between those two moving averages. And then I want to see where that will ultimately end up taking us. Obviously, I am bullish on this since that harmonic completion, the test of the daily 200, the bounce off of it. It's just that we're in the last couple weeks of August. And for those of you that don't know, the last couple weeks of August tend to just be the slowest and worst, at least from my experience having traded in the market for a while. So the big thing to remember is that although it feels as though stocks aren't moving, it's just because there's not a lot of liquidity. There's not a lot of people that are sticking around right now. So you're just, from a very basic perspective, you do not have the same number of traders, which are giving you lesser follow through and less participation, which means that the momentum on trades tends to be weaker and weaker. So when we're trying to like force trades or push trades in the final 2 weeks of August, this is where a lot of people will find failure and find options getting theta decayed and IV crushed and da 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 da. Because this moment in time is just where we see like it grind to a screeching halt. So with this, right, we are approaching the final days of August as we enter into September. And September is generally when we see the market pick up. This year in particular is really interesting as well because we have the midterm elections and there's a lot of questions. There's a lot of, what's the word I'm looking for? There's a lot of uncertainty surrounding that, right? So it'll be really, really, really interesting to see how the market responds to the final 2 months that we have before midterm elections. And, ultimately where we what's the phrase I'm looking for here? Ultimately where the dust kind of settles once we've kind of gone through that. But September, generally speaking, is when things pick up pretty dramatically. So I think for the most part, we're just going to have to continue to be patient and just outwait the rest of August here. All right. And then the other thing that we have going on, there's two things, I guess, this week that we've been waiting for, paying attention to. Number one, we have NVIDIA's earnings tonight. So NVIDIA is going to be reporting its earnings tonight. All right. Don't ghetto spread this. You will lose. Okay. That's just me thinking out loud, right? So don't do it. And let the market tell us. NVIDIA is a huge company. It'll give us some sort of movement. And then that'll give us some sort of idea to close out the week. And then as we enter into September, this right now is all about capital preservation. I wasn't even going to come on stream today, but I was, so early and I was just ready to go. And, so it just sounded like it was going to be fun. So I'm just suggesting that this is a great time to show an extreme level of patience and don't make any overly aggressive moves, right? Because now just isn't the time. Look at yesterday. When we signed off of stream yesterday, I'm not even joking. I think the list of stocks when we signed off of stream looked almost identical to the closing. Like things didn't go anywhere. And that, my personal opinion is until NVIDIA's earnings, obviously in a few hours, we're not going to go anywhere either. And then once NVIDIA's earnings come out, if that doesn't take us anywhere, the entirety of the market is going to be sitting on its hands waiting for Warsh's Jackson Hole speech. And that'll be on Friday afternoon? No, that's going to be at 8 o'clock in the morning, my time, 10 o'clock Eastern. Okay, so Kevin Warsh is speaking at 10 o'clock Eastern on Friday. So, for those of you that are like, Jackie, I got to make a trade. I got to do this. I got to do that. The opportunity and the momentum behind stocks and trades right now is going to be really, really limited. So you have to be either very, very, very selective on scalp trades to close this week, or you just really shouldn't force it because the moving parts are either going to happen on Friday following Warsh, or they are going to happen as we enter into September and liquidity comes back to the market. Okay? So everybody follow along so far? Everybody follow along so far? Does that make sense? You guys kind of with me in terms of our outlook? Is this the first Fed speech on a Friday? No. Jackson Hole is always the final week of August, Wednesday, Thursday, Friday. It's never a specific date. It's the final week of August, Wednesday, Thursday, Friday. And the Fed chair's speech is always on the Friday of that. It's always on the Friday. So Jerome Powell was last year. Jerome Powell did it last year. So we can actually even go back. We could probably even look back at his speech. So that would have been August last year. So here's August. And then let's see. So here, July, August, final week. Thursday, Friday. So his speech would have been right here. This was Jerome Powell's speech. Turn off the EMAs for a second. So this was Jerome Powell's speech right here. So what you see inside of the green circle was the Fed chair speech that Jerome Powell had on Friday of August last year. So this is the same kind of thing that you saw there. All right. And then we can even go back to Jerome Powell in 2024. I think I can go back that far. Maybe not on the 15-minute, but I think I can on the 30-minute. Okay. So here's August, final week. Wednesday, Thursday, Friday. All right. So here is Friday of Jackson Hole last time. So that's what it looked like last time. So it started on a gap up, sold off, filled the gap, speech ends, off we go. So, it's all over the place. Honestly, it's good to review prior price action. But in the instance of what we're going to see here, this is going to be totally different because this is a totally new Fed chair, right? Who has completely different ideas and a completely different outlook for the economy versus what Jerome Powell was initially wanting, or not initially, I guess, what he was doing over the course of his tenure, right? What Warsh is doing is a lot different because we're changing the way that inflation is calculated. And it's not that they don't care about the 2% targeted goal, but they don't care about the 2% targeted goal. Wink, wink, hint, hint, nudge, nudge. And so because of that, right, the data that comes in this morning, we had inflation data come in this morning, and the market reacted like it just don't care. Throw your hands up in the air, throw your hands up in the air, throw your hands up in the air, wave them around like you just don't care. Throw your hands up in the air, throw your hands up in the air, throw your hands up in the air, wave them around like you just don't care. That's the market doesn't care. They don't care about inflation. They don't care about inflation anymore. That's why the market reacts the way that it does, because the market doesn't care about inflation. The Fed doesn't care about inflation. They just don't care. The number one thing now is about driving the economy, driving the jobs numbers, right? That's the number one thing that they care about now, because here's kind of like the sneaky little, here's the sneaky little inside look, right? Here's the sneaky little inside look. They're not raising interest rates. So because they're not going to raise interest rates, that implies that they're either going to hold them steady, which they also don't want to do, or they're going to cut them. Well, you can't cut interest rates if inflation is rising. So how do you fix that? Well, you change the metrics for it, and then you make it look like it's not doing anything. And then you could say, well, inflation is sticky, but it's holding steady, so we could probably afford to cut some of those interest rates. Just you watch. Just you watch. Right? This is how these things kind of work. And it's shitty and it's sucky, but that's the fucking business. That's finance for you. It is, unfortunately, the way that it is. So our goal for right now is to just sort of navigate the murky waters, because right now the waters are murky. There's concerns over the bond market. There's concerns over oil and gas and energy prices. There's concerns over the US dollar. There's concerns over gold and silver again. There's just a whole litany of things that we have issues with right now that people have, I'll say, either fear, uncertainty, or doubt surrounding them. Throw in the midterm elections, which throw in another little shake of the dice in there. And all of a sudden, you have a market that is really, really sitting on its hands right now going, I'm not sure what to expect. So if they don't know what to expect, how are we supposed to know what to expect? Right? So rather than us, right, being retail, right? I'm not talking about the tits gang here in general. I'm just speaking about the general retail trader. Our goal, right? We shouldn't be focused on forcing trades when the big money that moves those trades is uncertain about them. They're not necessarily uncertain about Chewy or AMC or Nvidia or eBay or Tesla. It's not, no, it's not like that. It's more so that they are uncertain about the entirety of the outlook. And that gives them fear, it gives them pause, it gives them hesitation. And so they don't feel the need to force decisions when so much of the stock market has made all-time highs, and these hedge funds and these markets and these institutions and et cetera, these guys have made so much money. Why would they force it if the opportunity is not there? The opportunity being the certainty of the S&P 500 continuing to rise. Now, I'm going to reiterate this the same way that I do every single week. I'm bullish. 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 Fuck your little market crash. Fuck your little AI bubble. Fuck your little this. Fuck your little that. I'm bullish. That doesn't mean that I can't be cautious or hesitant at these highs, waiting for the market to provide me some level of clarity that makes me more willing to take risk on some of these stocks, where rather than waiting for the most perfect setup, I can enter an RSI wedge that has no divergence. I can enter a stock that only has one touch of divergence. I can enter a stock that goes to macro support with no other indications that it will bounce. Those are the kind of conditions I love to trade in because I get rewarded heavily for it. These conditions that we're in right now, Nope. No. Me, I like to trade the best opportunities. And that's why everything that we have traded has been highly, highly, highly focused. Whether it was Chewy, Unity, AMC, eBay, Wendy's, now, YSS, Nokia, Pizza, which is recent, CoreWeave, Hubs, any number of those things. Our goal is to look for the clearest setups until the market has some more general clarity. And once the market gives us that clarity, we can open the sails and we can I don't even know what the sailing term is, but we can ride the seas. You know, like we want to navigate them when they are clear and calm, not when it's choppy and wavy and fucking getting buck in this motherfucker. Because it makes the trades difficult to deal with and handle when so many things are moving so much percentages at any given time. All right, so our goal is just to continue to be patient and let the market provide the clarity first. Okay, that's it. All right, that's it. That's what we are searching for. All right. So when I look, I'm going to give you guys an example here right now, right? When I look at something like eBay, all right, I'm going to turn this off just for a second. I'm going to ask the chat box a question. Okay, I would appreciate a response on this question. All right. When we talk about trading options, right? When we talk about trading options and taking advantage of a trade that we may see developing, when we trade options, what kind of options do we typically look at trading to protect ourselves in case the stock doesn't make a move instantaneously? There's a specific 1, 2, 3 that I'm looking for. Okay. Good. We do in the money. The reason we trade in the money is because I'm afraid that eBay or any number of these trades that I look at entering or that I'm talking about or we see harmonics on, or it doesn't matter. I'm afraid every time that I enter that it's going to take 10 millenniums to get here to profit target 1, the 382. I then also assume it will take 10 millenniums for the stock to then get to profit target number 2. If it will take 10 millenniums, that means that, okay, number 1, I'm being a little bit over exaggerative in the sense that, okay, it's not going to take 10 millenniums. But why I'm over exaggerating is to kind of highlight the fact that I'm always worried that it's going to take forever for the stocks to get to profit targets number 1 and profit target number 2. And because I'm always worried about that, the number one thing that I like to do, even if I'm buying short-dated contracts, say like monthlies, right? Or even let's just pretend weeklies, right? The number one thing that I like to focus on is in the money. In the money. Because at the very least, when I enter that trade, even if it goes up 0.5%, 0.5%, 0.5%, down 0.5%, 0.5%, 0.5%, up 0.5%, 0.5%, 0.5%, 0.5%, 0.5%, 0.5%, 0.5%. My option was in the money that entire time. So even though, it was getting a little bit of theta decay, it wasn't getting soul crushed like an out of the money call or an out of the money put would. So when I look at something like eBay and I'm saying to you guys, hey guys, eBay has an RSI wedge with daily bullish divergence that could see a breakout following the completion. So maybe we're looking for a reaction trade. I'm not entering 105, 110, 120, 125, 130, 140, 150, 160. Look how long this took just to go from 88 to 98. It took 8 days. Okay? So can it happen quickly? For sure it can. But why would I trade out of the money when I'm looking for the move to happen now and I can just take advantage of right here? 100, nice, even round number with lots of liquidity. And I can catch a hopefully reactionary trade that breaks out of the RSI wedge and tests the center line, maybe getting to profit target number 2. Now, I'm going to show you guys a perfect example of why we don't do out of the money. I'm going to show it to you guys right now. Because I got a message last night that somebody said that they were losing money on their eBay trade. And I said, okay. And I saw the options that they were trading with. And I said, my boy, you know how I teach people how to trade in here, right? Now, I'm going to show you guys this, right? September 18th, 1 month to expire when we originally looked at the eBay trade. eBay at the time was trading at 100. So in the money calls would have been $100 calls. Now I want you guys to all see this, okay? The initial date and entry of the harmonic completion was either Monday, August 17th or Tuesday, August 18th, okay? If we go over to the eBay options, 100 strike for August 18th, change this to not EMAs, okay? August 17th, August 18th. Here's 17, here's 18. Okay? There's 17, there's 18. These are the candles of what the options are worth. Okay? This option on the 17th was opening at 500, hit a low of 400, and then the next day, on the Tuesday, the option hit a high of 550 and a low of 475. So any point at the initial completion and discussion that we had right here, those options at its absolute highest high was worth $550. And as of August 24th, so this hasn't updated in 2 days now because I guess there hasn't been much liquidity on this. In 2 days, 2 days ago, the option at the high hit 800. So even if you bought this at the absolute peak of the highest high where we spoke about the harmonic completion, you could have still made $250 in profit. Okay? Now, even if you sold it at where this opened at 620, you still would have made $70 in profit. Okay? Everybody, do you guys follow along so far? Do you guys follow along so far? Everybody with me? I want you to see this, right? I want you guys to see this. So if you follow along, just say something in the chat box so I know you're with me. I know it's boring and slow, and I know, but I'm trying to teach you how to make money. All right, because lots of people, I don't know if it's people or if it's bots, but I've seen lots of people complain that like the trades, right? Jackie, you don't show the trades, you don't show us your bank account, and you don't show us how many exact dollars that you bought Wendy's with last week. And it's like, yeah, I know, because I do it right here, and everybody's different, and everybody's approach to trading stocks is different, right? So the idea of showing you guys this is kind of showing you how I come to my conclusions on making these trades. That's why I do in the money. So does everybody see that option, no matter when we spoke about it at the initial completion, you made profit? Now, I want to show you guys what happens if you traded out of the money call options and didn't sell anything on this pump. Now, what I'm going to do here is I'm going to show you 3 different ones. I'm going to show you slightly out of the money. I'm going to show you a lot out of the money. And I'm going to show you way out of the money. Okay? The first one I'm going to show you is eBay September 18 105Cs. Okay. Now look at the results here. This is a little bit different, right? Because you can see that it did have a nice healthy rise. You definitely could have made some money, but look at how this thing has kind of stuck around this same area. If you weren't buying on that first initial harmonic completive low, you basically made nothing on this. Even though it made this beautiful move, you made nothing if you did not buy that Monday, Tuesday, because you bought out of the money. And it only went up for just that one day on Monday, and then it came right back down. And if you didn't sell there, guess what? You're now losing money on this. That's slightly out of the money. Not a lot. That's only slightly out of the money. Right? Now, look at what happens when you go a lot out of the money. Look at the 110C for September. Look at this, folks. At its absolute peak, from the lowest low to the highest high, you could have made $137. But if you didn't buy that exact low, you are either losing money or you're break even. If you didn't buy this exact low, you are now losing money on this option. Look at what happens when you go way out of the money. Look at what happens when you go way out of the money. 120C. Look at. If you didn't buy on Monday, you're losing. If you didn't buy the Monday harmonic completion, you're losing money now. It is so important. It is so important that you really listen and take advantage of the knowledge that I share, because trading in the money options can be the difference between blowing your account and saving your account. Look at the difference in this options chart here. Way out of the money. Look at the difference in this options chart here versus this one. There is a significant difference. You want to make trading, guys, as easy for yourselves as possible. Why fuck around begging for the stock to go up within a certain period of time, within a certain amount, right? Why beg for it to do that when you can just buy in the money and just wait for it to happen or not happen? If you get stopped out, you're going to save yourself a lot of money. And if it breaks out, you're still making lots of money. And you don't have to time the perfect fucking entry. That is the number one thing, guys. You don't have to time the perfect entry, and you don't have to time the perfect exit. And that right there can be the difference between making money and losing money. And with eBay, I had someone message me. They haven't messaged me back yet. Hopefully they do. But they were losing money on eBay. And I saw their options, and every single one of them was out of the money. Every single one. 115, 110, 125. Do I think that it can get to those profit targets? Yeah, sure. But by the end of September, hell no. By the end of October, hell no. So rather than try and force the move to get that high, why not just trade in the money and let the stock just go up naturally? That's what has transpired right here. And now you hold options that aren't losing money. These are the things that I teach. These are the tools that I try to give you guys so that you can use this knowledge to your benefit. And all you want to do when it comes to trading is make your life easy, right? Like if I listened to Jackie this morning and Jackie was like, yo, AMC has this 15-minute RSI wedge and it could break out. Well, if I was looking at AMC and I didn't want to trade shares on AMC, I would have looked at this morning from Jackie and I would have said, shit, why don't I trade an in-the-money call option, right? So I would have looked at this. I said AMC options. I would have said this weekly. I would have said 2.5 strike calls because those are in the money. And look at how much these are up just from this morning. I think this is the opening candle here. Look at how much these are up from this morning. You're already up 50%. Now, I say 50%. It's literally $9. So you would have had to buy like fucking 100 of these stupid ass contracts to make it worth it. But you see what I mean? If you want to trade, there's a fucking trade. But I don't trade like this. I don't go out and dump 2K on fucking AMC 2.5 calls because I see the RSI wedge. Okay, I saw the RSI wedge. I was hoping it would make a breakout, but like I bought it fucking down here. And I just want to see it keep going. Sure, I could trade this if I want, but I'm not forcing it. I don't feel it. So I just let my trade keep going and let it just go to work for me, you know? But that's the conditions the market is giving me right now. So I just don't feel the need to try and push anything. This is a game, a battle, a war of attrition. The longer you stick around, the more success that you will begin to have, because time in the charts is time in our hearts. Wait, what? No, but seriously. And then we look at AMC on the macro, right? And AMC on the macro continues to break out of its cup with handle. You know, it's continuing to break out of that cup with handle. It's on the verge of breaking the inside bar that it made yesterday, which is from this high and this low, which is an indicator signal, but I don't care, so fuck you. And now hopefully we can break out. And then if we do break out, we should be able to retest $3 highs. And then everyone that was in other people's discords laughing about the AMC gap down that happened after Adam Aaron diluted, and we talked about the back test of the Golden Cross and then failed to jump in because they're dumb fucking idiots, it's now gonna, oh, well, it looks like you missed even more money. And I'm not talking about you guys. I'm just shit talking, but it's cool. It's cool. So there you go, right? That's what we're looking for. That's what we're looking for as it pertains to the trades, the ideas, the opportunities that we have been seeing in the market. Everything that we have been looking at has just been a time of patience, a matter of patience, excuse me. And with that patience, right, we have allowed the best setups to develop, from AMC backtesting the Golden Cross and the upper trend line that we marked off here, to AMC building the cup with handle, to eBay coming down to the harmonic completion, to Wendy's looking to hold macro support in the inverted head and shoulders, right? To even new trades like pizza with its recent harmonic completion, and YSS with its recent harmonic completion. Everything is a game of chance, but we try to put the odds in our favor. And if you're not trading stock, which you probably should be, then as it pertains to options, I can't say this enough times, guys. I can't say this enough times. Pattern Seeker, Super Saiyan Jacked, what a fucking legend. You fucking legend. I can't say this enough times, you guys. The number one thing that you can do if you are learning to trade options is trade in the money. I know that in the money is going to cost you a little bit more. They aren't going to be $30 or $50 YOLOs. Trading in the money actually requires a little bit of capital. But the purpose of it is so that it trades like stock. So that way, if you take an entry because you think that the fucking thing is going to break out and you buy calls, right? And then this thing goes, right? Well, you got stopped out right here. Now, on the share box that we've drawn, right? Not on the options one, it'll show minus 1%, which doesn't look like much. But on your options, you probably just lost like 30%. But 30% is better than 100. And you were protected. And you have money left in your account to survive another day, to make another trade. That is the purpose of what we do. We are trying to survive another day as we continue to educate ourselves in the market. Plain and simple. That's it. If you trade in the money and you have a level of success trading stocks, you will start to find that those options will have a really, really high success rate. Because here, guys, I'm going to give you the secret to trading. And I'm sure that many of you know this, right? It's something that we've spoken about here quite often. But guys, the secret to trading is your emotions. Now, I know what you're thinking. I know. No, Jackie, you're not saying anything profound. I know. But I want to give you my own personal perspective. I want to give you my own personal, I'll say a little bit of a journey, right? Every trade in my early days of learning how to do this and all this other kind of crap, early in my trading days, every single trade meant the life or death of Jackie. If this trade doesn't work, I have to be cooked. But if this trade works, I'm definitely going to be rich. Yeah. Every single trade, I felt like that. And you know what that does to your psyche? You know what that does to your psyche? As soon as the stock that you thought was going to make you rich starts going down, you know what you do subconsciously? You get nervous. You get worried. You get fearful. You get concerned. It happens subconsciously. It is a natural human response. It is the fight or flight response. That's how our brains are wired as it pertains to money. Because for many people, you, me, lots of you guys in the chat box, money means a lot. It is the lifeblood of how many of us choose to survive. So when you put money into something that you think is going to make a big move, right? And it's going to make you rich, or it's going to pay off your bills, or it's going to pay off your debt. And then 3 days later, that stock's down 10%. Your approach now is not analytical. You're not looking at the charts. You're not looking at the data. You're not looking at any of that. Now you're just thinking emotionally, oh, I've got to get my money back. I've got to get my money back, man. I'm so cooked right now. I've got to get it back. That's the mental mindset that we have when a trade goes against us, because that's how we're wired as humans. For us to put X number of dollars into something and then to watch those dollars disappear faster than we ever made them, that will make anybody feel like a fucking psychopath. Now, you will come to find over time that there are going to be numbers in your account that you're going to be comfortable with trading on any stock. Right? I'm going to give you a little look into what I do, right? I've never really done this, right? Because I never really thought that people cared that much, but apparently they do. So I'm going to have this conversation with you guys, and hopefully this kind of opens your minds to the perspective of a professional trader. My personal number is 1,000. That's my personal number. I've found that any piece of shit stock that I have no idea about, ServiceNow, YSS, Nokia, Pizza, HubSpot, CoreWeave, any company, any stock that is in the market that I see, RSI Wedge, Bullish Divergence, MACD Cross, DMI Hot Coffee, blah, 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 blah. $1,000 is right. That's my sweet spot. If I see a stock, say like YSS, and I'm like, oh my God, it's at the harmonic completion. Oh my God, it's at macro support. I better dump 50K into this. If I put 50K into this, I fucking swear to you on everything that I love, I would shit my fucking pants in real time. You would watch me turn into a crackhead in real time. I swear to you, you would watch that happen. Because to me, that's a metric ass ton of money. And for me, $1,000 is what I'm really comfortable risking on any pile of shit that comes across our timeline that has a really nice setup and a really nice trade or a really clean thing on it or whatever it happens to be. That does not mean that I put $1,000 into every single trade. Because then there are other opportunities on a macro scale that have ultra clean setups, right? ultra clean setups like a rounding top on the weekly, followed by a deep butterfly harmonic completion, leaving several indicators at the high while also coming all the way back to support and making a weekly RSI wedge. Those kinds of trades, why would I only put $1,000 into this when I have a very, very, very clear trading plan? That's the low that we can't break. That's my stop. That's the support that I'm going to buy the fucking bejesus out of. And those are the targets that I'm going to go to. I'm going to put 10,000, 25,000 into trades like this because they have clear, defined risk. Not that the other ones don't, but I don't know shit about this chart. It's trading at all-time lows, for fuck's sakes. Nokia already blasted off from these lows and went up hundreds of percent. What? I'm not fucking pile driving my money into this now. Unity? Oh yeah, macro support. Of course I'm willing to put more money because there's clear defined risk. Now, does that mean that when I put those sums of money into those trades, does that mean that I don't get butterflies in my stomach? Does that mean that I don't feel the same level of anxiety that you guys do when you enter your trades? Oh, fuck, yes, I do. Even buying GME the other day and buying a couple hundred shares and adding it to the portfolio, that made butterflies in my stomach. And that's a stock that I've been buying forever. Every time I press the button, I get butterflies in my stomach. It's just a natural response to putting money down, you know? But when I put larger sums into these bigger trades, I have lots of anxiety and lots of uncertainty. But the simple answer is this. If I take the risk at the lows and I have a clearly defined plan, I am only risking a couple thousand, even though I am putting tens into a trade because of the clear, defined risk. That risk is not as clearly defined on trades like eBay or Wendy's or Now that have already kind of made moves up or already kind of taken off from the lows that I really wanted to buy but maybe never got the opportunity to or pussied out on. That's okay. But when it comes to these larger trades that come all the way back to these macro areas of support and open the door for really big opportunity, I'm willing to place more money there because I am comfortable with what the clear defined risk and reward is. The other trades that come across our timeline that we just randomly chart here or there, those are stocks I don't know shit about. So why am I going to pile drive thousands of dollars into those things? $1,000, 100 shares, a couple hundred, maybe an option or two or something. But I'm not pile driving boatloads of cash into these trades so I can hop on X and screenshot $50,000 gains and say, look at how cool I am. And also my cock is huge. All I'm trying to do is show people, right, how to do this consistently to make money. If 50K is your light amount of risk, well, shit, that's you then, right? But for the majority of you guys that listen and watch these streams, I know that a lot of you guys have smaller accounts that you're working with. And if you're working with a smaller account, your goal should not be trying to turn 500 into 500,000. Your goal should be to turn 500 into 1,000, and then 1,000 into 2,000. And then 2,000 into 4,000, and then 4,000 into 8,000, and then 8,000 into 16,000. Your goal should be to make it grow consistently, not to chase the pipe dream of getting some option that goes up 400,000% like Moderna. Listen, 3 people in the entire fucking world bought Moderna before it gapped up like that and got paid those 400,000% contracts. AKA pretty much fucking nobody, because it's a very rare thing. The easiest way to build wealth in the stock market is to do it consistently. And to do it consistently, you need to have a level of emotional stability that allows you to remain calm even when things get tough. Because they will get tough. Right? A great example of this, I can use two of them. A great example of this, one is Lululemon. Right? Bought this at 140, then 135, then 120, then 115, then basically 100. And now it's finally making moves, but this thing did not work out the way that I had initially hoped and planned for. And so this is an example of what happens when things go wrong. Can you manage the risk? Can you manage the trade? And me, I've managed to kind of get this trade. It's not green anymore, but I've managed to get this thing into a place where it's not really costing me a lot. It's still at macro support, and mentally and emotionally, I'm really chill with my cost basis of 122 and just waiting for it to see if maybe it will come back. Maybe it'll make a bullishly divergent touch. Maybe it'll bounce off this golden pocket. I can handle that. I can manage that because I've sort of planned and executed for this. People who didn't have a plan that then immediately saw it break down, it becomes second nature to say, oh my God, I got to panic. Right? That is human nature, because if you didn't have a plan, now all of a sudden it's going against everything we thought it might do. This is where being consistent so that you can build these plans and have these ideas ahead of time for the in case shit happens scenario. And if you're prepared for the in case shit happens scenario, I promise you that you will begin to find more success than you have ever had in the market. Because the number one thing that you will probably take away from this conversation here, guys, is going to be position size. Number one thing, position size. If every single time you are entering a trade, you are full port, your mental and emotional state is going to suck. It's going to suck. However, if you are entering into trades with sums of money that you are comfortable with, the little bit of down and the little bit of up and the little bit of sideways before the big move, it doesn't scare you off. And then you finally get to hold that trade through the move you were hoping would happen. Fear is the number one killer of any great trade. And I know so many people got stopped out of Unity, and I know so many people got stopped out of Chewy before they even went up. And I'm not judging anyone because everybody is relatively new to trading. My simple question is this: did Unity ever break the support that we highlighted? Never. It never broke the support that we highlighted. So why would we be afraid of this, even if it came down to here? It was still at support. And the same thing applies with Chewy. Did it ever break the area of support that we had initially been targeting, including the gap fill? No. So why would we be afraid of this? Well, the reason that some people would be afraid or get stopped out is because the position size is too meaningful. And the second there's red in the account, your emotions start going against you and saying, oh, here we go again. I'm a fucking idiot. I'm going to lose money because I'm dumb and I took a bad trade and now it's red and I fucking suck and blah, 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 blah. No, you don't. No, you don't. You are just watching it every fucking day. And you're going, oh my God, it's red today. Yeah, but then it's green tomorrow. And then green the next day. Then green the next day. Then green the next. Don't pocket watch it every fucking minute. You know the support. You know the areas it cannot break. None of it was ever broken in this move. On Chewy, on Unity, on AMC. on any of these things. On Gush, I could go back to Gush and talk about the summertime support and how the support was never lost at any point that we were talking about Gush. Not one time did it get lost, and people got stopped out of this trade and missed it. Not one time was this support lost. The fear comes from the position size telling you to be afraid. Be afraid that you're down $500. No, it sounds bad because it's minus 500. But does it look bad? Is the chart that you took the trade on still intact? If it is, what are you afraid of? What are you afraid of? It's at the support. It hasn't broken it. It's still divergent. You still have a MACD cross. What are you afraid of? For me, now circling this whole conversation into GameStop, that's how I feel about this thing. Right? I don't care about options right now. I could so I could go, right? And I could buy a shit ton of options right now if I wanted. Right? I could go and get a shit ton of options and prepare to YOLO myself into GME and just go full fucking tilt. Right? I could. But my simple question is why? There's no premium. Okay, yeah, yesterday there was, I guess. There was like 250K, which is good. So, good, but not enough. So, good, but not enough. And so, that's good. But again, because it's not enough, after, again, like 700 days of negative premium, negative premium, negative premium, negative premium, well, I don't have any signs. I don't have any signals. I don't have any symptoms. But I do know one thing. I know that GME is at macro support. And I know that GME is in an area where I would just love to own it. And for me, when I consider GameStop at these levels, right? When I consider GameStop at these levels, I just think to myself, well, GameStop is at macro support. And essentially, to me, any price below 20 is great value. So I am very, very, very happy to long GME and have ownership of GME right here, right now. Will I be upset if GameStop gapped down and went to 16, 15, 14, 13, 12, 11, 10, whatever? Sure. Yep, definitely. But I wouldn't sell it. I wouldn't be overly worried about it. Because I know a few things, but one of the most important things that I remember Jackie talking about every single fucking day for the last couple of weeks is Jackie's been talking about 22, 22, 22, 22, 22, 22, 22. And the reason that he's been talking about 22 to everybody with regards to GME is because we got a big ass hole at 22. We have a big ass indicator signal at 22. So I have a large amount of confidence that GME is going to get back to 22. So if I accumulate a long-term macro position, 19, 18, 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. As long as I have stock of this company at any price below $22, I'm going to make money. That's how I feel right now. So even if I put tens of thousands of dollars into this thing in just straight up stock, and then it gapped down to $10 tomorrow, I wouldn't be worried. I'd be really disappointed if I didn't have any more money to buy it. And that I, blew my entire load of buying stock at this level here between, say, 17 and 18, right? I would be really, really disappointed about that. But listen, I would feel very confident that this thing would just go like this, come back up to the $22 spot. And now all of a sudden, okay, I missed 80%, but I still got this. I still made money because rather than YOLOing it into options that make no fucking sense right now because there's no fucking signal, well, I just want to accumulate stock below that gap. Now, I can choose to accumulate stock for two different purposes, right? I can choose to accumulate stock for two different purposes. SD Birder, I see you, buddy. I'm going to come back to that. Sorry. I could choose to accumulate stock in one account that is for my long-term portfolio, right? That's the one where I've held GME in there for almost 6 years, right? And I could just choose to buy more GME in that account. What I could also choose to do is that, hey, listen. Maybe I don't know that GME will go to 22 tomorrow. Maybe I don't even know exactly when it will happen. But if I had a secondary account that I don't give a shit about, and I could park, say, $10,000 in there of GME stock to make a trade, I could do it right here. And then if I did it right here with $10,000, right? Now I'm going to give you guys two different examples. If I did that with $10,000 right here, okay, my cost is going to be $18 a share. Okay, so I have $18 per share, $10,000 of it right here. Okay, now it gaps down. Oh my God, I lost all my money. Well, no, I didn't. I lost $8 per share, or 44%, which means I lost $4,400 so far out of that 10,000. But why would I sell it? It's stock. It has no expiration. Okay, maybe I bought at the wrong time. What a fucking turd. Yeah, but I still have those same targets that I'm aiming for. Nothing has changed. Why don't I just hold this at negative $4,400 loss for now, and then wait to see it come back up? Now, maybe I don't have the funds to add additionally down here, so I can't, so I won't. And then after the stock has this big nasty, oh my God, it has a crazy earnings and it skyrockets and whoa. Well, now all of a sudden the stock has gone to $22. So I've made $4 per share, or at an $18 cost basis, I have now made 22%, or $2,200. And now what I could choose to do, again, if I wanted, right, is I could choose to look at this and I could say, well, you know, 2,200 is nice, but there's those other indicator signals that Jackie was talking about at 25. Maybe I could hold on to like half of this trade. So I could lock in $1,100 in profit and still carry half of my position size. And then it goes to 25. And then it goes to 28. And then it goes to 30. And then it goes to 35. And then it goes to 40. And then it goes to 50. And next thing you know, a trade that you were just trying to go from here to here on is now trading all the way up here. Because it's stock. And I can afford to hold stock. And if I can afford to hold the stock, even if it played this dumb scenario, which I'm not telling you it is, I'm giving you the worst case. Even if it played that dumb scenario out and you had no money to add it. And yes, it would probably take months for it to come back to that gap fill and do everything that you would hope it to do. But again, this is worst case scenario. The better and more idealistic scenario that we could see play out here, right, is that a stock position taken in these lows, following the harmonic and the U bottom back test, and the bullish divergence and the fractals and the MACDs and the DMIs and the ADX and the it works. And in the best case scenario, this thing goes back and retests not just 30, but 35, 40, 50, 60. And then all of a sudden, right? I know it's not options, but a $10,000 position taken all the way down here has now netted you thousands of dollars. Doing it the safe way. Stay fresh. I know that it's not glamorous and I know that it doesn't happen, overnight. But when we don't have clear signals, but we have a clear opportunity as it pertains to the evaluation of this company and the macro supports that we see on the chart, there is something to be said about saying fuck options and looking at just building and accumulating a larger position around these lows that you could benefit from. And people will say, oh, Jackie's selling his GME stock. Oh my God, oh my God, oh my God, oh my God. There's one account that holds all of my GME long term. And then there's a secondary account that trades GME. They are not mutually exclusive. And if there is an opportunity that GME would bounce from here to here, and I could make tens of thousands of dollars or hundreds of dollars on that, you better believe that I will. And that's what I want to do. And I don't mind if it plays out the worst case scenario and it gaps down and does something so fucking terrible. I don't care. Because there's the gap and the indicator signals and all of the other stuff that we've spoken about. And fundamentally, the business is amazing. I can afford to hold those shares for an extended period of time. And I love the idea of the trade making me a decent chunk of money. So that's what I want it to do. That's it. Plain and simple. All right. So hopefully that kind of helps you guys out with regards to expectations with GME and the psychology of trading. The psychology of trading. So meanwhile, while we have had that entire conversation, the market has been absolute dog shit. So good that AMC and BBWI have decided to make some moves. But otherwise, holy fucking shit, the market has been actual fucking AIDS. Actual AIDS. Like actually AIDS. And then Take Two, you guys were saying, oh yeah, I did see. Because they released their little fucking statement. Rockstar released their little fucking statement. Matthew Tortosilis, I'm surprised you still have a platform. Ha 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 ha. Just talking vague terms and getting newbies some hype and glue onto. All right, cool. Thanks. Good to see you, man. Appreciate you. Continue your job at Wendy's and continue to tune into the streams. We appreciate the viewership, man. Thank you very much. Appreciate it. All right, what else we got here? Oh, yeah, I got to do SD Birder. We got to do SD Birder. So SD Birder here. Let's see. Going back up to the top. Bum, 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 run, da, 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 da. Costs. With the $10 bomb, Marino. SD Birder says, cost monthly chart looks eerily similar to GME. You think that you think when GME finally does something good that cost will also have? I've only been trading since 2024, so not fluid with all the meme stocks. Yes, so this is one of the OG meme stocks, and what's actually really interesting, SD Birder, now that you bring that up, we can probably clean off this chart. We'll just, you know what we're going to do? We're going to refresh this whole thing. Yeah, we're going to just So after the big events that happened in 2020, 2021 with GME, costs also just saw a straight retracement into the ground. Now, as it saw that straight retracement into the ground, what was really interesting, I can't remember if it was the monthly or if it was the weekly, but we're going to take a peek here. Yes, it was the monthly. So on the monthly for COS, when we were making this retracement down, the monthly on COS was also making an RSI wedge. And in doing so, I think it was also the weekly that we saw this on. I think. Was it? Yeah, the weekly had this RSI wedge kind of thing going on here where it actually sort of broke out and then it faked out that breakout and then came all the way back. So it actually had this move here and then came all the way back down before having an absolutely monstrous rocket launch prior to GME having its rocket launch, right? So you guys can see here April into May and then July, June. And you guys just saw COS went fucking nuts. Now, this is stock that has 0 options. There's no options on this thing. This is just straight up equity. So this definitely is one of the OG meme stocks. And what's really interesting is certainly from the monthly perspective on COS, excuse me, there is definitely some sort of like RSI wedge structure here taking place once again. Now, whether or not this is macro support, that's probably a little bit more difficult to say because, it kind of just is, I'd say it's sort of just in the middle of no man's land. But you do have the macro 0.5 Fibonacci right here. So if we thought the GME and AMC and all those things were going to have some sort of crazy meme stock move, this would be one of the ones that you would certainly pay attention to, but you also got to remember there's no options on this thing. This is straight up equity. So on this thing right here, the weekly is also building a big fat indicator signal. I'm just noticing that as well. Boy, oh boy. It's building towards something, that's for damn sure. I wish the weekly looked a little better. Well, hold on a second here. I don't really like that one as much. Maybe this. Or this, I guess. Maybe. It's kind of awkward and goofy, but it's interesting. But right now, other than just the potential for the RSI structures, I don't know that I would be super convinced about a bigger breakout for this thing yet. And that just has to, it's too low, so that won't work. Alrighty, so not really too much to say on that one, although I do like the monthly and weekly RSI wedges. Those are pretty interesting on that thing. I'll definitely give you that one. Is there any way to undo a timeout? Yes. I thought. Yes, it's okay. I think there is. I think, but I'll do it after. I'll get back to him. He'll be all right. He can handle it. He didn't mean to. All right. What else did we have here? Did we have any other super chats come in there? We had Kevin Gwebenlian and Carapuza. Good to see you guys. We had a Pattern Seeker with the $20 bomb, Marino. He says, thanks for the morning lesson. Fuck yeah. Fuck yeah. All righty. So thank you. Thank you very much. I appreciate that, guys. Thank you very much. So, yeah. That is basically this morning for you guys in terms of things that we got going on. I did want to quickly just touch on Take Two because I know you guys had some questions about it this morning. Take Two saw a little bit of a pump up because Rockstar released a statement regarding the leak, and it was just your normal like speak, but say absolutely nothing. All right. So, I still think that the most common logical conclusion with Take Two is to wait for the harmonic completion. I'm setting the alert here at 219.90. Okay, 219.90. I've got the alert set, and now set it and forget it. So same thing that we did on BBWI, waiting for that harmonic completion. It's the same story for take two. Set it and forget it, 219.90. And we'll wait and see if we can get this thing to continue to push down. Alrighty, and then just taking a peek at crypto, not too much going on there. I'm still very worried about it making a lower high. It still makes me exceptionally nervous, so I'm very worried about that. Crypto stocks, whatever, not much to say there. GME's warrants, we could touch on those for a minute or two here. So there's BBWI. So I think that harmonic's complete. Yeah, it did complete. Sweet. Okay, good. So there you go. The harmonic has completed. So it did give us a decent reaction. Which is great. So really, really, really good. All right. And then GameStop's warrants. That's what I said we would do for you guys. GameStop's warrants. So GameStop's warrants on the daily. We're still looking for the break of the daily RSI center line. All right, so the daily RSI center line, guys, that's where we're at. That's where we're at. Big one. There we go. So we got that going on there. Sweet. So there's GME's warrants right at the center line again. So that's going to be the great divider between Super Bull and Super Bear. So there you go, folks. And then GameStop 1797 doing absolutely nothing. Order flow, nothing. Checking in on AMC, nothing. Checking in on Chewy, nothing. All right. Alrighty. What are we thinking about Q2 earnings? Records across the board. Records across the board. USO trying. Yeah, so we haven't looked at oil or gold here this morning yet. So US oil. So US spot oil is still holding above that golden cross, which is super bullish. I really like that. And then USO. USO also holding above its daily 50-period moving average. So not really too much to say on this thing. It looks like you were maybe like day trading it or something. Saying something about the 30-minute. No bullish divergence yet. Possibility of a MACD cross here and bullish divergence on the MACD, but the RSI is not. So I would be a little bit cautious on US oil for right now. And then gold. So gold, after hitting the macro 0.5 of resistance, now finding a little bit of a pushback. So just a little one, nothing too wild, and it's because we're seeing DXY, or the US dollar, having a decent sized turn up. So that won't last. It definitely will not last. Let's see what else we got going on here. Checking in with the chat box. SkyDaddy had the meta thing going on. So we talked about that last night with you, or yesterday with you guys on stream, about SkyDaddy's meta trade there. And that thing ended up gapping up 2% this morning. So currently up 2.5% right now, actually. So Meta made a beautiful move there for SkyDaddy in the group, and they crushed some Meta contracts on that one. So that has worked out well. Finding resistance at the daily 50 on Meta, but still inside of the little golden pocket there. So if you can hold above 580, I would say that Meta still looks pretty good for some continuation to the upside, just being cautious of the daily 50. All right. And then did Snap keep getting sympathy with that? No, it did not. Snap got absolutely disintegrated. Wait for this to load. So Snap, oh yeah, absolutely fucking disintegrated. That's crazy. That's crazy. Hit that daily 200. First test of the daily 200 in almost a year. And rejected the fuck out of it. Printing a daily bearish engulfing right now. So that's not good. And then where's DKS? I wanted to take another peek at DKS. So DKS was down another hunky chunky percentage, but made a little bit of a comeback there. So there you go on DKS. What else? I saw that Kenview was green a little bit, and I saw American Eagle was up a little bit. Still, UNH. I saw Gabagoo was talking about this yesterday. Great bounce at that rounding top so far. Not a bad bounce. All right, what else do we got going on here? Checking in with this list. Clapped, except for Dave. Fucking Dave. Bye-bye hymns. Nag, crypto. Yeah, all right. All right, let's see what's going on. What else we got going on here? Now we'll see, Brody Kiwi. We'll see. Jackie, would it be dumb to get NVIDIA calls 2 days to end? Yes. If you want my very honest answer, yes. Is there a way to measure the retracement of distribution? Not necessarily, but I would just use Fibonacci in this instance, right? I would look for just the most recent lowest low, so I'd probably say COVID. And then I would pull a fib from the low of COVID to the highs that you made. And then I would say, distribution, theoretically speaking, it should make a lower low. So I would assume that you want to break this low here and then hit this 382. And then you could start talking about maybe a shift of the trend. But so far, Dix is finding macro support at the 236, and it's probably deeply oversold. So I would imagine that it will try and find some support here and try and make a little bit of bounce at this 236, although it probably will be short-lived. Doesn't mean there is an opportunity to catch a bounce from here to maybe the top side of the gap, like a dead cat bounce, but it's not something that I would trade. It would be something where I would look to buy the, what's the opposite? Buy the rip. So I guess short the rip, I guess would be the term. No, that's for parabolic SAR, Pupacabra. That's for the parabolic SAR. Open has a sloppy diamond bottomy. Oh, yeah. Yep. Hey, good eye. That's clean. Super clean. Yeah, I like that. That's nice, nice pattern recognition. I'm a little worried that it's going to lose it. But that's really good pattern recognition. Good job. Yeah, I would agree. That is a sloppy diamond bottomy. So we can head over to the pattern index. Go to D for diamond. Diamond bottoms, they rank as, for an upward breakout, they rank as one of the worst. And for a downward breakout, it actually is one of the best at a fake out breakout pattern. So diamond bottoms tend to be one of the best fake out breakout patterns in the market. And these tend to actually break down more often than they do break up. So I would draw the profit target like that, and that would suggest that open could come down to 294. 294 does appear to be a prior area of like support and resistance, or at least pretty close to one. Can sort of see the resistance and support, breakthrough, gap through, resistance, support, breakthrough. So it seems like a somewhat important level. Maybe if we draw a more macro Fibonacci, that could give us a little bit better of an indication as to what we're maybe seeing at that level. So it's right near a macro 382. Right near a macro 382. Okay. So yeah, probably waiting for like under $3 now on open is probably the smart thing. Because it doesn't look like you're getting much, if any, harmonic reactivity following this one that we drew here, talking about the possibility of an accumulation here. But just didn't really like the look of it. You know, it is building some bullish divergence, which is nice, but printing one of the worst, like one of the best fake out breakout patterns is not, it's definitely not ideal. So, Have to be chill on open for right now. Have to be very chill on it because that sloppy diamond bottomy is a little bit concerning. Excuse me, sorry. And then AMC. AMC is retesting the highs of the day. AMC retesting the highs of the day. Yes, Dix did have poor forward guidance. They lowered it, so that was why we saw such a nasty reaction. Does GME have a daily RSI? Oh, it probably just a typo. Inverted head and shoulders. Hey, Chuck. Hey, Chuck. Hey, Chuck. Hey, Chuck. Are you watching? Chuck, are you watching? Are you watching? Are you watching? Watch this. Watch this. I already drew it. For the last couple of days, as we were talking about this. Shh. Be very, very quiet. It's short sour hunting season. Skrt. So, and then we also do have the daily MACD attempting to cross below center, although it's taking its sweet fucking time. Shit, that's funny. Alrighty. So, GME continuing to find itself stuck in this 35-day window of nothingness. I'm in a glass case of emotion. That's what we need. We need Ron Burgundy. There we go. This is what everybody in the chat box needs. This is for all of us. Okay. We'll put it on GME here. There we go. All right. We're just going to put it here for you guys. There we go. There it is. There's GME, folks. There's GME. So we are currently in a glass case of emotion. ARBs seem to be selling less calls. Well, not earlier in the week, though, Coop. Fuck, those motherfuckers were slamming that shit. On Monday, Tuesday, or I guess not Tuesday, but on Monday and Friday last week, those premiums were like -1 mil. 1.3 and 1.2 on Friday and Monday. That was terrible. Fuck, that was brutal. God. That was so bad. But it definitely does seem to be relaxing, at least to some degree. I would definitely agree with you on that. Break glass only in case of Mo ass. Nice. There you go. There you go. Look at that. Nice rhyme time. That was a good rhyme time. That's nasty work right there. How'd you even do that? That's crazy. All right. What else? So we got AMC holding steady, 275. It hurts my eyes to watch right now. Believe me, I feel the same way. I feel the same way. I saw somebody in the chat box say something which I assume is fake, but I'm just going to take a quick peek here. Yeah, so that's definitely fake. So why would you come into the chat box and try and spam some fucking gay bullshit fake news? That's some weirdo behavior, dude. Have you been here for a while? No, that's literally your first comment. That's some weirdo fucking shit, bro. The Life of says breaking news, GTA 6 delayed till June of 2028. Why would you say that? That's weird shit, bro. That's super weird. And then look at this, folks. AMC with a new high of the week. Make sure if you're trading weekly options that you're locking some in here on this move. That's about plus 10 per con, or about 55% on weeklies. All right, there you go, folks. So there's AMC retesting the prior highs, giving us a new high of the week, giving us, I guess, a retest of the highs of the week. Yeah, good enough. We'll take it. I accept. So now let's see if we can break 276, and let's see if we can get that pump towards $3. Let's see if we can get AMC to give us that pump towards $3. The 15-minute looks beautiful. 30-minute, beautiful. It all looks very good. I'm very, very impressed with this so far. Now just got to desperately break this prior high. Just got to desperately break that prior high, and we'll be in business, folks. But AMC does look pretty damn good. AMG. All right. Jackie, eBay deal Gonzo still have hope? Why? I didn't hear GameStop offload their position or anything. Did you? Oh, GameStop not saying anything? Nothing to really talk about. The dog days of August, unfortunately. So, yeah, no, the eBay deal, I don't see any reason why it wouldn't still be on. Jagala? What did Jagala say? Jagala says Greg posted that on X. What did he post on X? What did he post on X, Jagala? Sorry, I wasn't paying attention. Oh, I was looking up your guys' channel activity, and I just realized that it won't show any of your old comments because we removed all the old streams. Duh. Of course. How could I be so silly to forget that? Classic Jackie. Classic. How could I forget? All right. Get back to the 15-minute. Zoom that in a little bit. Get rid of this. Good. Sweet. There we go. Let's see it break that golden pocket. Oh. BTC testing the macro 382. Could it bounce? Let's take a peek. Wow, AMC, that's quite the candle. That's quite the candle. Is there like some flow coming in or something? What's up with that? No, let's go over to the dark pool. AMC. Yeah, AMC is getting some dark pool activity, which is cool. It's good to see. All right, well, AMC going all over the place here. AMC all over the place here. So far, finding resistance at that golden pocket, son of a bitch. Let's see here. Oh, yeah, the 382 for Bitcoin. So let's head over to Bitcoin. Pull a fib. You said macro 382. I'm assuming you're probably talking about that high, hey? It's probably what I assume. Oh, yeah, look at that. Okay, so yeah, testing that macro 382, and then you also have the macro 236 just below you. So the only thing that gives me a huge amount of hesitation right now, guys, is that it left an indicator signal back at 64.6. And now it's got huge daily bearish divergence in the overbought zone, which you could argue is a failure swing. So I'm really, 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 really nervous about Bitcoin right now. Also, the fact that it failed to break a higher high makes me nervous. So this area of support that you guys have highlighted here between 77.9 and 76.9, this is a very, 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 very crucial area for the stock to hold, because if it doesn't, it's going down. Alrighty. Jagala and SD Birder, Pupacabra, Dank Dakota, Weak Sauce, Realisphere, John Reverb, this is a fine day. Good to see you guys. Jailboy, good to see you guys. Good to see you guys. Let's go to gold. Let's check in on gold. So yeah, gold just hit the first kind of point of resistance. I also assume that it probably had some sort of TD sequential count. Two-day 9 count. Whatever. Gush is gushing.
SPY is literally doing nothing. This is like one of the slowest days of the year. And then GME is at the low of the day, 1793. So that's the low of the day. So we'll clear this out. Keep that anchored VWAP. Okay. AMC, fat rejection of that golden pocket. You fucking fuck. Eat shit. And then let's see what else we got in the chat box here. So last Q2 on GME, they announced the warrants. What do we think is announced for this Q2? If anything, I would assume an extension of the deadline on the warrants. Other than that, I can't imagine that there's going to be anything absurd that we will see from this Q2 earnings, other than the fact that GameStop will be continuing to make a shitload of money. Gold is afraid of, well, because DXY and gold are basically opposites. When DXY goes up, gold goes down because people want to spend bucks. And when dollar goes down and gold goes up, people are worried about too many bucks being spent and too many dollars being circulated. So they're worried about inflation. So the dollar is inflation, and gold is the antithesis of inflation. So that's basically why. Ultimately, if DXY is to go to 93, it means risk assets up. Yes, we want the US dollar to go up. We want the USD to go up. Unfortunately, as it seems right now, gold is still the hot trade against the inflation concern. And I don't foresee that changing immediately, probably not until after midterms. You know, so I'm just patient right now. It's the number one thing I can say about every decision that we're making is I'm trying to be so fucking patient with everything. Kind of news or earnings or tin you think that Jimmy will go? I have no idea. Yeah, I don't have the slightest clue. I just hope that something happens that propels the stock to the upside. But you know, we had no idea when we bought $10 way back in the day that it would ultimately be the cat coming back that would cause the stock to make the big breakout. When we looked at the chart and we looked at the technicals and we looked at the indicator signals and we looked at the levels, all we said is we want to go from 10 to 20, and I don't know what'll cause that. You know, and the same rules apply here with GME today. Why will it go to 22? I don't know. What if a surprise earnings gaps it up to 22? What, you know, like there's so many different scenarios that could play out. Rather than playing the guessing game, I try to make it simple for myself. I could sit here and speculate all I want, but it's not making me money. I want to do things that make me money. And so things that make me money are ultimately decisions. And the decisions that I'm going to make here is to accumulate stock and say fuck options until the premium begins to show itself. Because as it stands right now, I don't care who you are. We have watched the premium chart for over 90 straight sessions. And in 90 sessions, 77 of them have been negative premium. 77. We have now reached 88% of the last 6 months having negative premium. 88%. Almost half a year's worth of price action has been negative premium, negative premium, negative premium. Not really much to say there. If we want the stock to go up, we very clearly all know what it is that GME needs, and it's premium. So for me, I'm just comfortable accumulating stock. I don't give a fuck about premium while I'm accumulating stock. It's got no time. It's got no premium. It's got no IV. It's got no... I'm good. I'm chilling. Right? So for me, the easiest thing to do is just accumulate stock. And then when the premium does say, hey, Jackie, it might be time to pay attention, well, then I will pay attention. But for now, I am very comfortable accumulating stock, and then if it goes red, it goes red. I don't care. I saw red for fucking like 3.5 years of just terribleness. So what's a couple of weeks? What's a couple of months more? You know, that doesn't bother me. What would bother me is buying leaps and then watching them bleed 50% and then having to question, boy, did I make the right decision or was this stupid? You know? Cooper, do we think that Ryan Cohen is a doofus? I don't. I definitely do not think that Ryan Cohen is a doofus. He might be a little retarded, but which of us isn't? Oh my God. Did you see the active jobs posting for GameStop? Are they planning on making their own marketplace? Well, I think the plan is to take over eBay. So I think that has been the plan for a while, my friend. Would you not agree? Then Spy doing literally nothing, guys. Like literally doing nothing. Oh my God. These are the days. I was looking back on the viewership last year in July and August, and oh my God, dude, August is just a nightmare. August is so bad. Ugh. Oh man. Did you mean Figure? All right, let's take a look. Oh, I don't want to use Spy. All right, let's see here. Yeah, so right at its daily 200, yeah. Below its macro 382 currently. Not the worst thing in the world. Just a little bit below it. Nice uptrend. 4 hour. Hourly. Had multiple touches of bearish divergence across these highs and then ultimately dropped. But now you're testing the hourly 50 period moving average. So I don't hate that. Let's drop to the 30-minute and let's just see. 15-minute bullish divergence forming. No, 10, 5. 5-minute, maybe a little failure swing forming. So if you're hoping that the daily would turn into a wick below this and come back up, the 5-minute is certainly suggesting a little bit more positivity. So that's good. Other than that, the daily 200 and the 382, it's not a bad spot. But it does look like this area here has been a point of contention for resistance for a little while. So what is that? 41, 42-ish? Could probably just draw a box around it. Just like that. So it definitely looks like there's some resistance there on FIGR, figure technology. So I personally, I would prefer to see it back test lows. I hate buying things high. So I would prefer to see it back test lows, like something in here. This would be kind of cool, you know, because then you could start talking about maybe it looks like a little bit like accumulation. Let's see here. The dog days. If you get slower bored, could you look at Capper? Yeah, for sure. For sure we could look at Capper. So no indicator signals, but the number one thing that I would say you should focus on now with Capper, draw a fib from high to low on that swing. So you've broken the 382 and the macro 236. So theoretically speaking, if you can continue to bounce through this range of 750 to 8, you should be able to see this thing not only fill the gap, but potentially retest, you know, as high as $28 to $30. So I already know looking at this, I'm not going to have any indicator signals. I can just tell looking at it, I'm not going to have any indicator signals. Yeah, I don't have any indicator signals, but the stock itself, I mean, that's a great bounce off of this whole range. And look at the gaps in the this thing. Mark Lovato. Hey, Jackie, can we look at Enphase also? ENPH. So Enphase is getting dangerously close to a death cross. With that death cross, you find yourself currently below the macro 236. So 3860 is going to be a big spot that you want to desperately get back above, because if you don't, it just seems like common sense that Enphase is going to come right back down to these lows of support at like 33 to 31-ish currently trading at 37. Checking in on the RSI, rejected center after entering the bear zone. So that's kind of like confirmation of the bearish move. So I'm not enthusiastic. 4-hour death cross, tested it, rejected, right under the 236. I really am not. I think you want to wait for probably 33, 32. I think that's probably the easiest one. Mal Nasty, would you take a look at Iron? Hourly rounding top and 30-minute RSI channel. 4-hour testing the 50-period moving average. Daily is testing a death cross and staying underneath it, which is extremely concerning. Quickly drawing a fib from, we'll say, the most recent or usable low, which is probably there. So we'll go from there to there, probably at the 382. So you're below the 236 with a death cross on the daily as the RSI is slipping below center and staying below center. From a macro perspective, I am immediately nervous about this thing. Okay, so we'll check the hourly for you, like you said. So hourly, I see your little micro rounding top. It's very small. I would be worried about its reliability because it's pretty small. But you are at the hourly 200 period moving average, which is good. That's good. 30-minute, you were saying, was an RSI wedge or something, maybe. It looks like it was an hourly RSI wedge that already broke out. You see what I'm saying? Kind of looks like this was already an hourly RSI wedge that broke out here. Now you're getting a back test that could be bullishly divergent, but the problem is the bullish divergence isn't really happening, at the bear zone. It's sort of happening in the middle of it. So I would probably just say I would stake my claim as like this low right here at just under $40. That's probably where you don't want to see this thing go much lower. If it holds that, life is good. If it doesn't, there's probably trouble. All right, so that's what I would say there. Then BBWI, nice little reaction. Nice little reaction. So again, I didn't trade this or anything. I told you guys I'm not trading the reaction, but for any of you guys that are, it is making very nice reactive moves here. Seeing like a 5 to 6% turn, so very nice. Let's see here. There's not very many green stocks today. Woof, almost ready for a trade again. Oh, I haven't looked at Woof in forever. So Woof. I don't know that I love this trend line. Why does everything look terrible now? Every stock that we look at that I open, I'm like, ugh, I don't know. Ugh. Fuck. Damn. I like that this thing has held relatively steady within this range, but I don't see anything that jumps out at me. I would love to see it make a daily golden cross. That would be sweet. The weekly is like tightening very, very much. Yeah, I don't see anything that jumps out at me or stands out to me on this one for right now. Bark, on the other hand, I definitely like a lot more because Bark has big indicator signals and it's got a nice structure here. So the odds of this making a reversal are decent. They're pretty decent. But Bark has really got to show something by getting through the center line of that RSI. That's what's really going to be important for Bark. But it still looks great to me. I really like Bark. Bark is nice. I do like this one. Let's see what else we got going on here. So AMC fighting back after that fat rejection at the golden pocket. Fucking turd. Look at you and sorry, I skipped over a couple here. Yes, I'll look at Roblox. Appreciate you, Deezy. Okay, let's take a look at Roblox and then I'll take a look at you. So Roblox. So Pedo Defender making a little bit of a bear flag. So a little bit concerning that it kind of looks like Pedo Defender is making a bear flag. And if Pedo Defender was making a bear flag, the possibilities of this going to extreme lows are not unrealistic. And the lows of that bear flag on Pedo Defender would take you right back to the same lows that we had kind of initially been targeting on this fucking piece of shit. So I think for right now, my thoughts are pretty simple on this one. I think it's in a macro downtrend now that rounding top ultimately failed. I mean, we did get a nice little move off of this. Like, this was fine. But now that it's made that breakdown move and you've got this bear flag, I think the easiest thing to do is just to not even trade this, bullish or bearish. I really think the easiest thing to do is just to wait for it to come back down to this macro area support. Because if it comes back down to this macro area support, this is a spot where the stock has bounced off of several times before and made some very, very significant moves. And you guys know these are the kind of charts and these are the kind of trades that I love to make, because these are the ones that can snowball and balloon into something significantly bigger than what we had kind of, I'll say, initially anticipated. So with Roblox, I think the simplest thing to do is just to wait for it to get back down to under $30. And then if it tags this box of support, we can look at a much more macro trade on this thing for a lot bigger percentages. So that's what I would say on this thing. So we did have that really nice rounding top that we were looking for the reversal on, and we did catch a nice move, and then it started pushing back towards earnings, big gap down, and it's been pretty much dog shit ever since. So that's about there. Next one on the list, Pupacabra asking about Unity. So taking a look over at Unity, so it was down 2.5%, and it was below $44 this morning, but when it opened, it didn't quite get there. So I would like to see this continue to push into the weekly Bollinger Bands, the same idea, the same concept that we've kind of been talking about the last 2 weeks when we were talking about shorting Unity as a potential hedge against our positions, because price action was spending 3 weeks outside of the Bollinger Bands on the weekly, and it was opening and closing outside of them 2 consecutive weeks in a row. So the expectation is that we could see this thing not only come back inside, but maybe make a stronger retracement, be it towards the weekly 50, the weekly center line of the Bollinger Band, or perhaps even the daily Golden Cross back test, which could take us all the way back down here to like $35. So Unity still just, this is going to take a little bit of time. So I'm excited that we've entered it and that it's already starting to pay us. So the Unity Jan 50p. So nice that it's already starting to pay us a little bit. It's nothing, insane. We're only talking like $100 to $80, but it's a trade that's already gone positive for me. And those are the kind of trades where it just psychologically, it puts me in a better place where I just feel a significant amount more of confidence regarding the potential for Unity to continue to make this breakdown. And again, hopefully come back and maybe even backtest this Golden Cross that we're kind of looking at here on the daily. So I would like to get rid of this and put just that on there, and then get rid of this, and that's good. And then one thing I don't think I did during that whole time is I never looked to see if it left any indicator signals on the low side, and that one got filled, so that's good. Hourly filled, 30-minute. I don't think it ever left anything on the low side. As far as I remember, I don't think it ever did. No. So we had smooth sailing the whole time, which is fucking crazy. That's actually crazy work. So we'll see what happens. But so far, the Unity idea is playing out a little bit. Now, if you guys were trading weeklies or monthlies, whatever, I guess. If you were trading the monthly 50Ps, those are also doing really, really, really well. Those actually went up a pretty sizable amount since that low. So 20%. And then the weeklies. I don't recommend trading this kind of shit because I just think it's fucking retarded. So yeah, it's good. Don't. GME at the low of the day, 1793. Chat box. Oh, I know, right? Did you speak about DKS already? Good entry. It's not something that I would want to trade right now. It's in the midst of a distribution. So I wouldn't want to long something that's in the midst of distribution. The last time we did that was Lulu. And remember how quickly we got burnt on Lulu for a little while? Should you look at EOLS? Sure. ELS. That is what you said, right? ELOS. ELOS. Stock. Nope. Okay, what did you say? EOLS. Evolus. Okay. All-time low, all-time high. Maybe something awkwardly harmonic, I guess. Maybe. Technically, I guess. Nah. What's that? 6 what? 6 fucking skibbity? Is that 7? That's 8? Oh shit, okay. 1.2727. You could make the argument that there's a butterfly. But it's I mean, you already got the reaction in the move, so at that stage, I guess you probably just pull the more appropriate fib from here to here. So you're definitely going to run into a roadblock at $10. That much I can guarantee. So what did you say? Talked about it in Friday at close. Yeah, so I mean, it broke off of the daily 50 and it's done exceptionally well, also breaking the 382. But you have a ton of resistance sitting here at $10. So expect that it's going to hesitate and pause at $10. That's almost a guarantee. PRGO. Tesla. All right. PRGO. PRGO completed that harmonic. So you do have the bearish bat harmonic completion that we spoke about on Perigo. So make sure you're aware of that. The harmonic bearish bat just completed today. So just so you're aware of that, that's what I got for you on that one. All right, looks like our drawing worked out quite well. Nice little bounce off of this area that we spoke about. Nice little 17% rip. So that was a good one. We had Alternator asking about Tesla. Look at that structure. That's hideous. Yuff. Close to breaking down from it. I don't think that I would call this a bear flag. I personally don't think that I would. Checking in on the technicals. RSI is having difficulty at center as it also rejects the death cross for I don't even know, this is like the 7th time that it's once again rejected the death cross. So I'm not very enthusiastic about that. I know you said short, so there's some potential. 4 hour. Nothing to really see there. Hourly. Slip below the hourly 50. Lower half of the RSI. It doesn't look good. But so much of this is going to hinge upon NVIDIA and the earnings that they're probably going to produce here, right? And then also Jackson Hole on Friday. I think a lot of trades are probably better made next week, but I definitely do think Tesla sort of looks weak here. I definitely do think it looks pretty weak. I think if I was looking at a trade on this, I would almost turn my attention, instead of options, I would almost turn my attention to Tesla Q. And I would ask myself, what's Tesla Q doing? There's a 4-hour RSI wedge that just broke out on Tesla Q. So if you're looking for Tesla to continue to make the break down and you're long Tesla Q for put side, you want to break this 236 at 2170 for Tesla Q, and then you want the RSI on the 4-hour to break center. And if those 3 circles can be broken, you should be able to see this have a pretty sizable move up while Tesla breaks down from that very awkward structure that it has. Very awkward structure. You don't really see Tesla do that very often. Kind of did it right here, actually. And then So interesting there for Tesla. Alrighty. Apple. All right. What are you thinking about for Apple? RSI on the 4 hour, fine. Daily, probably equally fine. Yeah. Back above the daily 50 period moving average. Not really much to say. I'm assuming you're thinking about being bullish on it, right? Coming back to fill these gaps. Probably not a bad idea. But there's nothing that like jumps out at me that makes me like, oh man, this is crazy. You know, like nothing sticks out at me. Maybe truth to the HSBC. Yeah, I mean, it sounds like it definitely is true, yeah. Future buyers of the stock. Oh, you know they're going to be. Yeah, there you go. Cracked teeth, yeah. The 333 gap. Okay, I was right about that. Yeah, that seems like a decent idea. Billy. So China stocks have been getting absolutely shit on for basically all summer. Pretty much every China stock all summer has just gotten absolutely fucking shit on. So we are looking for China stocks for some deep value opportunity. Billy just so happens to be trading at a macro 236 or just underneath it, I guess. So that seems pretty important. No bullish divergence to speak of yet on the weekly or the daily. Dropped to the 4 hour. Not much to say. I would, with China stocks, guys, I would stay away for right now. Not that there isn't opportunity, but the opportunity is developing. It's not there yet. It's developing. So let it develop. All right, let it develop. All right, let's see. Okay, good stuff. All right. All right, there's Derek. Good to see you, buddy. Good to see you, Sir Derek. Good to see all of you guys there in the chat box. ANF booming. Let's take a peek. Abercrombie and Fitch. So there you go. That third test of the low did end up working. That sucks because I wanted that harmonic completion. I really wanted that harmonic completion on ANF, but that's okay. So ANF now breaking just full. Did they have earnings or something? They had to have had a good earnings. Oh yeah, they crushed. All right. Wow. Reported 4.17 EPS versus 1.98 expectation. Holy shit. That's a crazy beat. So yeah, look at that, Abercrombie and Fitch. So we were long on this thing from before when it had this big move, but ended up selling it and didn't get to jump back in because I didn't get that low or the harmonic that we were targeting. So a little bit of a bummer there, but that's all right. Let's see here. A friend has been buying GME puts and then selling them to buy back more stock. Yeah, lots of people do that with covered calls. Lots of people have been doing that with covered calls. With the Strait of Hormuz closed, China lost more than 33% of its oil imports, which past few years, the reason why China economy boomed. Iran selling them $20 barrels of oil. So there you go. Hey, good macroeconomic analysis. That's some good work. See a bear flag on SPY on the daily. There can't be a bear flag on SPY on the daily if the stock looks like this, right? That's the rules, right? There can't be a bear flag on a stock when it looks like this, right? Because bear flags are what? Bearish continuation, right? And does this look like any of that would be bearish continuation of the trend? My suggestion at that stage would be to say no. So I wouldn't consider it as a bear flag. I would just simply ask myself, is there hidden bullish divergence that everybody's ignoring? I would say, well, maybe not on SPY. How about futures? Yeah, futures has some not hidden divergence, but futures does have bullish divergence, right? Just as we marked off here, higher low, lower low, lower low, right? So now the big thing I'm seeing with futures here, at least just the first thing that becomes immediately noticeable, is 4 hours struggling to break through center. And it's really having a heck of a time at 7,700 on futures. So, yeah, that's what we got going on there. Did you see my super, Jackie? Oh, no, I didn't. Brandon Schumacher with the 5. He says, Jackie, I've been MIA from streams for a long break from trading in the internet, but we back. Thoughts on LAC and American Battery. LAC. So LAC, it's just a matter of holding this golden box of support. So unfortunately, it's come all the way back. But the cool thing is that it filled the indicator signal that it left here. So now that it's filled that indicator signal, it's come all the way back to support. So that golden box between 270 and 250, that's what really matters on LAC. Oh. It's all right. It was early. Started early. Yeah, it was. It wasn't. I know, right? It was good times. So I'm surprised the chat box showing up early today. And then we are going to look at the other one that he wanted me, Brendan Schumacher wanted me to look at ABAT, American Battery. So ABAT testing the macro 236, the micro golden pocket. So it is at a massively important area of support right here. This just simply could not be a more important area for the stock to build and find some support here. All right. So what I would say in this instance on ABAT is that this thing desperately needs to hold $2. If it doesn't hold $2, I don't know that I would want this thing anymore, right? Because then I'd probably want to wait for it all the way down below $1. So that's what I would say on ABAT is that you desperately need to hold 2. Now, you do have a little bit of a kind of like weekly RSI wedge sort of forming. It's not bad. So there is a little bit of potential there for this thing. But I'm not like crazy enthusiastic about what I see. I love the support. I think from a higher low perspective, if you're hoping to continue this trend, that's the higher low that you desperately have to hold. So it looks like you're kind of getting pinched in this zone here. Looks like you're kind of getting pinched right in this zone. So let's see how that ends up turning out and how you kind of react to this zone that we have here on the stock. So I'll put that on the members list because it is pretty, I mean, it's interesting enough that it's at that macro support. That's really cool. All right. Sweet. NLST. And then this will probably be the last one for the day. NLST. So retesting prior highs. That's what it looks like. Draw box. Looks like you're retesting the prior highs of resistance. So that appears to be all that matters is the prior highs of that resistance. Does the stock have enough momentum to carry it through that box of resistance? And it's buried in the bull zone. Your MACD histogram is good, so it definitely has some great momentum. Now the question is, can it get some candles that burst it through that resistance? But it looks pretty good. It looks pretty good. Then BBWI is at the high of the day. BBWI at the high of the day. AMC battling it out at 270 to 271. Alrighty. Yeah. All right, folks. Well, I think with that, that's probably going to do her for today. I think that's pretty much it, and that's pretty much all that I've got for you guys here today. Not too much more to add. GME is trading at a low of the day. Most of the market is complete and total dog shit, with the exception of like a handful of stocks, including one that we just recently added this morning, BBWI. And AMC surprisingly managing to hold itself quite well near these highs too. So there's a couple of things that I guess have gone our way, but, you know, nothing really worth bragging about or jumping out about. You know, it just kind of is what it is for right now. So Thank you, everybody, for tuning in to today's show. Really appreciate it, as per usual. And looking forward to seeing you guys tomorrow for Thursday's show. Gotta catch 'em all, Pokemon.